We have Rudolf de Bruyn, who is a co-founder of AMED Funds. We have Simon Pepper, managing mining director at DMT. Charles Bond, partner at Gowling WLG. And Andrew Nesbitt, who's the head of mining at Riverfort Capital. So, gentlemen, welcome. I'm sure people will filter in as we get the conversation up and running. Exactly. So, let's talk about it. So, exploration. Who's exploring at the moment? Where's it happening? How's the exploration sector looking? Who wants to start me off?
Shall I start?
Simon.
Well, I mean, if you look at the figures, last year, 2017, there was a record in recent years of over $7 billion spent on exploration. The fact is that most of that exploration is being done in, I suppose, what I consider to be the safer parts of the world. That list is topped by the likes of Canada, Australia, and I suppose the challenge that we have in Africa is to try and get up that league table and get more of that exploration spend by the mining companies in the African continent.
And you mentioned when we were talking earlier about data you're getting back from the laboratories about where people are exploring. Do you want to tell us a little bit about that in terms of new versus old? And
yeah, I mean that's something that we see that could be a bottleneck in the industry. I mean, in my own personal experience, working in places like Tanzania and Zambia, you've got these assaying companies. It's quite a major investment for them to set up a laboratory service. And it's also a function of working in Africa that the continent is so fragmented into such a large number of countries. So if you've got, for instance, SGS with their investment in their lab in the northwest of Tanzania, you get a downturn in the gold industry in that part of the world, and suddenly that's a whole assay lab that is forced out of business, and there's no replacement for that. And it's something that is a valuable part of the whole exploration industry chain, and as I say, it could represent a bottleneck to inhibit some exploration.
But are people exploring into new areas, new projects, or is brownfield seem to be dominating at the moment?
Yeah, I'll have a go at that one. What's interesting evidentially for me is that I do a lot on the capital raising and bringing new companies, generally exploration companies, to market. And there's definitely been an uplift in the last 12 months or so. I think last year we brought 4 new companies to market, all in the exploration area. One was copper, which you'd expect in the States. 2, interestingly, were spin-outs of existing projects sitting within larger groups. And I think that's a definite sign that people think now is the time to take the risk on maybe those non-core assets and spinning them out. One was a tin project in Namibia. The other was a gold project in Mali, where they were both owned by a public company, and they said, look, we're not getting any value out of this at the moment. Let's do some more exploration over it and spin it out to a new company. So I think that's a real development. And the 4th one, interestingly, was a group called Altus, which you probably know, and they are an incubator, exploration incubator. And that, I think, is a real seminal point in the market when you've got someone who is willing to buy a whole load of small, very kind of small-scale assets with the potential to spin each of those out in exploration terms. So I think that's a really interesting area which we haven't seen for quite a long time. And I think marks the return of exploration.
Absolutely. I think this sort of incubator model is something that we might touch on a little bit later, actually, when we get into how projects are funded. But Rudolf, Simon mentioned that when he mentioned where the exploration was happening, that most of the funding was going into sort of safe jurisdictions. AMED funds, however, you look at Africa. Why Africa as opposed to Canada or Australia?
Okay, well,
it's okay. It's on.
It's a combination of factors why we look at Africa, but where I'm most familiar with. But secondly, the statistics actually favor Africa for new discoveries and value add. One of the big firms recently, it was a study done that I saw about 3 months ago, one of the big firms calculated the exploration spend and in a per continent, and then calculated the value uplift achieved with that exploration spend. And only 2 continents in the world achieved a positive result where the value uplift achieved with the exploration spend was positive, and that was Africa and Australia, which meant that if you take all the exploration money spent in South America and you looked at the value uplift, they actually did not create value on balance. So more people lost money than made money in the other continents. Africa was, of the 2 continents, Africa and Australia, Africa was the best. So that sort of underscores why we are looking for projects in Africa.
Why is Africa achieving such good results?
I would say it's probably on balance underexplored, comparatively speaking. If you take North America, for example, I think North America has been explored intensively for decades and decades, and Africa not. Many of the African countries only came out of the sort of repressive systems in the last 20, 30 years, and where mining laws changed favorably, and where exploration started in earnest. So I think Africa is still relatively underexplored.
Right, fair enough. So Andrew, do you just want to come in here, and how are you seeing the exploration space at the moment? And when you're investing in companies, how much of your investment goes into the early stage exploration companies and how much into later stage?
Yeah, I think it's quite interesting.
Try. Yeah.
Hello? Yeah. I think it's quite interesting. I think we're still quite early in the exploration phase. Guys that are drilling and get good results, the share prices aren't like rocketing up like as per the previous cycle. I think it's quite hard for juniors still to raise money for your conventional metals. If you're just a gold miner, your copper guys, you're getting a real junior, it's still quite difficult. I think if you're in a speciality kind of mineral, which I suppose you can call nickel, cobalt, those graphite, you seem to be able to get money a lot easier. So I think we're still early in the stage. I think what's in terms of how we fund, really we're looking for, we've done a couple of fundings in early stage exploration, mainly around acquisitions of projects, so adding to tenements, that kind of thing, or essentially putting some money into a drilling program where we believe there's a good catalyst coming forward. So we're quite involved, but generally our funding is a little bit later stage.
And I mean, you mentioned there, some of the money goes into acquisitions. To sort of move to a slightly different subject, going forward, as we're looking at sort of resource replacement, are we going to start seeing the majors, the bigger companies, putting more money back into exploration teams, building up their exploration teams, increasing their exploration spending, or are they going to be looking to replace their resources through M&A? Which way do you think that's going to go?
I think the responsible thing is to try and get decent technical people in to have a good look at the junior market and what's available out there before going in and doing a whole lot of drilling on your own properties just because you own them. See what's out there and then make decisions in the correct way of saying, okay, you have this in the junior market, how does your property compare? And it's going to take a lot long. I think it's going to take a senior producer longer to develop those skills of going back to do real exploration compared to putting a technical team together that can scan projects and go deeper into those projects. So to me, the right way to do it would be look at the junior market. Don't think that will happen. I think the guys will start getting itchy and start moving on to exploration before they actually have the skill set built again.
So you're saying leave it to the juniors and let them be bought out?
For sure.
Fantastic.
That's
Rudolph,
why
do you have any thoughts on this?
I've seen in South Africa the majors undergo the change from having all the exploration geologists on the payroll, and then slowly letting them go. In the late 90s, 99, 2000, Goldfields, the old Goldfields of South Africa Limited, had something like 700 geologists on their payroll. And then they decided to unbundle the company, and they retrenched all those hundreds of geologists, and they just scattered all over the world. And, we've sort of been thinking, how this trend actually, where it's going. I think the reality is this: in mining companies, you're either chasing cash flow, positive cash flow and dividends, or you are developing and trying to create value. And there's an inherent imbalance in this whole thing, because if a mining company tries to pay dividends and produce positive cash flow, they don't want to spend money on exploration, because exploration takes a long time to bring some fruits to the company. And I've seen, well, this is my personal opinion, that maybe we should test this, but I have seen more and more non-geologists move into the top management structures of the big mining companies like Anglo, BHP and so on. Accountants move into those positions, lawyers, I'm a lawyer, and we shouldn't be there, but we are. So we take the top positions in those companies, and what do you do when you try to maximize profits? You cull the costs that don't bring the profits, and that's the exploration geologists. So I think it's a permanent structural change. I think that the big mining companies are not going to go back into exploration, or sort of the kind of exploration we're talking about here, and they're going to leave it to the juniors. The juniors are not interested in when they do the exploration and profits and dividends. They want to make discoveries and bring projects forward to sell to the majors. So it's two different ball games, and I think that's here to stay.
What does this mean, though, for the development of talent in amongst the geologists, the geological community? Simon, your
Well,
thoughts?
yeah, we're touching on some very important points here, and I think you're quite right in those comments. I mean, in my experience, when I think back to when I was working in South Africa many years ago for a company called Anglo Vaal, which would probably be classed as a mid-tier mining company in today's terms, and we had a team of about 12 or 15 geologists working in the Barberton area alone, and that was just a sideshow compared to the number of geologists working in the Wits on exploration. And then there was this trend a few years ago where rather short-termism, where the major companies decided to really cut back on their exploration teams. That forced a lot of geologists, a lot of very good, talented geologists, into the junior mining sector, where they become exposed to typical junior mining companies with their one pet project, which is very much susceptible to the ups and downs of the market. Most of these juniors don't make it, so those geologists end up looking for other work, and a lot of them leave the industry and move on somewhere else, and they'll, the chances are they'll never return. And the key to successful exploration is in the development of good, talented geologists. There is absolutely no replacement for that. I think personally that it has to come back again. I think the big companies will be forced to build up their geological exploration teams. I see that as inevitable if they want to face this challenge of resource replacement.
Charles?
Yeah, I was just going to say, I mean, one model that I think we've already seen a couple of examples of, which I think is kind of mutually beneficial for the majors and the juniors, is the joint venture, type development. If you've got a major, you don't want to necessarily hire all those geos, but at the same time you want to take some exploration risk. You go into a joint venture with the junior. The junior needs the cash. They can take the risk on the exploration, and at the same time the major can sit there and take the benefit of that exploration longer term, and eventually, you know, if it all works out, it can acquire the project. I think that model may well be the kind of short-term fix for the industry, and we've, as you say, we've seen a couple of those.
But I guess also, if you're a junior company, you're probably looking to hire only one or two, you know, geologists. You're wanting to hire the best, the grey hair. But where are the young geologists going to be kind of nurtured? Can the junior section nurture that new generation of geologists? You know, where traditionally maybe they would have, you know, started their career working for one of the big majors, and, you know, risen up.
And there's everyone from Camborne here. We need to.
Yeah, no, I don't think that that model that you described is sustainable, because I don't see how the juniors can get away from their hire and fire approach to the way they do their work.
Let's just move on to technology. And I mean, obviously, if we're not going to have any geologists, we're going to have to, you know, get the robots involved, get the AI involved, take some of the technologies that have, you know, having success in medical imaging, even in, you know, now seeing this in oil and gas. What technologies are you seeing coming forward to de-risk exploration to a certain extent, and maybe, you know, open up new exploration targets at more affordable prices, and maybe with fewer geologists?
Just going back to some of the comments. You know, one thing that's worked in this when equity's tight, which has been for quite a while, is the JV kind of thing, or where a company goes in and you know, buys an equity stake at the corporate level. But as equity becomes easier, less and less juniors will allow themselves open to being not taken over, but infiltrated. Let's use that kind of word. So it's to me, it's not going for that model. It's an appropriate model for tight equity markets. Right. As time goes on, then it becomes more acquisition, becomes more not aggressive, but juniors want to push the value up as high as possible before they allow people to look under the skirt.
Sure.
So, on the technology side, I mean, I'm no professional on any technology thing in terms of geologists, but the resolution on these new techniques have become so fantastic that you'll never get away from not being able to drill. But the amount of money that you need to spend on targeting and getting the drill rig in the right place is reducing all the time, which is massively positive for juniors. Still need a geologist, though, unfortunately.
Sure. Rudolf, have you seen any new technologies that you think are exciting in the space?
The geologists that we have on board, they use all the newest technology, but this is maybe an important point. The new technologies are quite sophisticated. It's not like you read about it on the last page of the Sunday newspaper. It's these guys have to do courses. They've got to really get into it. So what tends to happen is you get consulting firms specializing using specific technologies, and you also have firms specializing in making new technologies available. So I think where things are moving is where whoever's in charge of exploration will have to just know which technologies are available. They may not be experts themselves, but they know how to hire it in. So that's where things have changed dramatically from the old days, say 30 years ago. What you did was you did soil sampling and then you did drilling, and that's about it. You didn't have much, none of the new technologies were available. So you didn't really have these absolute experts. I see in our firm, the older guys, they battle with the new technologies. So nowadays, you've got so many of these new technologies, but it's so specialized, you can't have it in-house. So you've got to hire it in. So what your exploration team has to do is to know about all these technologies, and then bring in the specific technology that you use for that stage of the project, bring it in, do the work, and then you pay the guys and off they go, and then your team works out, okay, what's the next step? And then you hire it in again. So they sort of like a conductor pulling in the different fields of expertise. You can't have it all on board. It's just too much. Too expensive.
Simon, your thoughts on new technologies?
Well, I'd just like to echo those points. I mean, I think there's tremendous scope for consulting groups to get involved in exploration, and it's the natural way to fill this skills gap that we've been talking about. I mean, it's a very successful example is the company I used to work for was African Mining Consultants based in Zambia, and that was the team that discovered the Kamoa-Kakula Ivanhoe deposits in the DRC. So I think that speaks for itself. Yeah, I can see the same advances that were described just then. I think, especially in the area of geophysics. I mean, it's clearly become more sophisticated with the use of AI, maybe airborne geophysics. There's scope there for intelligent real-time interpretation of data. And this has got the potential to almost skip a step in the exploration phase, because if you traditionally you'd spend a significant amount of money to hire an aeroplane or a helicopter to do a large-scale reconnaissance survey on a wide grid spacing. But if that data can be interpreted in real time, you've got the opportunity for the aircraft, maybe robotically, to go back, having found anomalies, and go and do a much closer survey over that anomalous area. And this would cut out a lot of the follow-up ground surveys that would be typically done in a geophysical exploration program.
Okay, well, let's talk about how people are going to pay for exploration, or how people are paying for exploration. What's the appetite at the moment, do you see, for exploration funding, for grassroots exploration funding?
Do you want me to have a go at that? Yeah, I think what's really interesting is the difference in the markets at the moment. I mean, discounting for one extent, what's happened in the markets in the last 48 hours. Certainly, we've seen, Australia has been the place at the moment to raise money. And, the great thing about, I guess, the Australian market is we've got the retail investor, and they value exploration. In London, things have been slower. The exploration is getting funded, but it's a trickle rather than a pour. The deals that we've seen have been, kind of 3 or 4 million at a time, nothing major. But that's the kind of the differential at the moment in the exploration markets, and I think London will get better, but we're always behind. So yeah, I think it's coming.
Yeah. And what role do you think these sort of high-profile discoveries, such as last year, everyone was very excited about the Pilbara and the golden conglomerate. How important is that in driving retail investors back into exploration?
Yeah, I think if you get a story, Sol Gold is perhaps one of the the typical one in Ecuador. Suddenly you get a story like that, everyone thinks this is it. We're going to get rich quick, and it's great. It does drive that market, and I think there is more money coming in. I think that retail side in Australia has been very helpful, but of course, trouble is all you need is a couple of failures, and suddenly people start losing money, and then that gets switched off very quickly. So that's when you need the more careful capital, I think, coming in from maybe the institutionals into the exploration side.
And do you think also it's possible that some of the money that would have come from retail investors has been kind of diverted into blockchain over the last year, and now that bubble has burst, we might see people getting back into the exploration space?
Well, let me take that one, please. I saw a graph a few weeks ago of the money that has gone into Bitcoin specifically. I'm not talking about the blockchain per se. That seems to be, I'm not so familiar with it, but that's a technology. But Bitcoin is a particular company. And the graph shows the money flowing into Bitcoin going absolutely like this. And then the same graph shows the money that went into exploration and mining and goes like this. And the conclusion is that when the Bitcoin bubble bursts, if it hasn't already burst, that money should probably then flow back into mining, where I believe we have now entered the next super cycle. So I think it's inevitable. It's almost a given that money will flow back in a big way into the mining industry. The figures that I've seen in those articles are run into the hundreds of millions of dollars going into Bitcoin. Hundreds of billions, not millions, billions of dollars. It's amazing. That money comes back into the exploration mining side. We're going to be flush with a lot of cash.
So we started off this conversation saying that, I think it was S&P had written a report saying that $7.9 billion had been spent on exploration in 2017, and the first time it had gone up in 4 years. Your predictions for 2018 is that amount is you're saying it's going to go up by how much, do we think?
Multiples, I think. It's possible. Whether we have the projects to accommodate that is a different question. But I'm sure there are quite a few guys walking around here who's got a few ideas about their projects and how much money they need.
Absolutely. Do we have any questions from the audience for our panel here? Stick your hand up if you have a question for us. We'll get you a microphone. Don't be shy. Nothing? No, look. No? Oh, he moved. It's like an auction. Don't move. Okay, no worries. So I think, to be honest, we're sort of running out of time here, and we need to get on with the next one. But, the question at the beginning of the title of the panel was exploration heating up, ?
Yes.
I think it's obvious. It's not. It's already started.
Absolutely, and I think we can see that outside there in the hall, 2 years ago, exploration companies were finding it hard to find meetings, get meetings, and now they've all got packed agendas. So I think it's a very sort of encouraging time, it seems, for the exploration space. So thank you very much to our panelists. Some excellent insights there. Can I have a round of applause for the exploration panel?